Welcome back. You're still watching the newsroom with me, Karunya Rao. Let's touch base with the management of Lupin. They delivered their Q2 report card as well last evening. You have Nilesh Gupta, the managing director, and Ramesh Swaminathan, the CFO and head corporate, joining us to talk about the Q2 performance. So first up, Nilesh, can you talk about the trend in Pro Air and how did the US market grow? If you could give us some color.
Sure. Actually, to be honest, we are very pleased to see our business rebound globally. All geographies performed, especially the US and India, and especially when you see it sequentially. Obviously, the US was the lead. We had strong inline product performance, including ramp-up in levothyroxine. We relaunched the Glumetza generic, and then, of course, like you said, we brought albuterol into the market as well. So from the 150 odd levels in Q1, the US business is about 180 million in Q2. So obviously a significant increase sequentially. And we still have ways to go, right? So I think we're excited with the business bouncing back in line with what we had talked about. Obviously, we were very pleased to get the albuterol approval and launch. We wish we had got it even sooner. I think it's a great opportunity for us. And especially as we go into Q3, Q4, this is, when the season kicks in, this is when we see the uptick in the business as well. We've had 9 product launches so far in the US. So pretty strong movement, especially when we go into Q3, Q4. Obviously, we have to, I think we were underperforming significantly. And I think we're now starting to get back into our own. So we're looking at a strong Q3, Q4. Our second largest market is India, obviously a very important market for us. Again, the market, as you know, started bouncing back from September. We believe the current numbers for market growth will probably be 4 to 5% in Q3, Q4. And this is that our expectation for internal growth for India would be 6 to 8%. So pretty strong growth coming, and when you couple that with some of the optimization measures that we have in place, you would have seen the improvement on the manpower cost, a little bit on SG&A. You see the margin improving significantly.
Do you expect this momentum in the US markets to continue, Nilesh?
I think we've been north of $1 billion in the US, right? I think that's the first hurdle for us to cross. It's obviously not happening with what happened in Q1, but obviously we're looking at numbers. We're at 180 billion, so the next hurdle will be north of 200 billion. That should certainly happen in Q4, if not in Q3. So that's why you see the steady build-up. We're still ramping up levothyroxine. We're still ramping up albuterol. Q4 will be where we have meaningful ramp-up in albuterol as well. So you're looking at numbers much stronger than the current.
And just to add to that, the flu season is just about clicking in America. So you'd expect Q3 and Q4 with a lot of our cephalosporin products and other flu products, Tamiflu and the like, to also increase, to start contributing. So you would expect Q3 and Q4 to be certainly higher, apart from, of course, albuterol ramp up.
Okay. Coming to you, Ramesh, then, if you could talk to us about the debt during the quarter. Why was it increased and what happened in the quarter? If you could give us some update on that front.
An increase in working capital during the course of this quarter. It's largely on account of accounts receivable, but as you can imagine, it's bulk of the sales ramp up in America happened in September. That's the reintroduction of Glumetza and albuterol. Obviously, given the credit period in America, this is something that still stay in accounts receivable, and that's the reason why you find that there is actually an increase. The operating working capital number of days has gone up to 145. But this is in line with, in fact, the Q4 figure of last year. We would like it to be lower over time. It's certainly higher than Q1, but Q1 was more of an aberration of kinds. We are working to get back to the same kind of levels as in the past, but this will take some time, and you would see such normalization potentially happening in Q3 and Q4.
Okay. All right. What about the margin benefits? Will MIS benefit being there for H2?
So there is obviously, the government of India kind of revised the scheme, and so you had some money creeping in September, but up to September rather. So there is actually a decline, and it is showing in our overall numbers. It is a fairly substantial number, as things go, but we are expecting, in fact, road tech to come in to click in the next year. The government has also asked for recommendations from, in fact, the industry, and we are hopeful that the government would take it favorably.
Okay, what about the operating leverage benefit with this?
This has been reflected in the way our overall EBITDA margins have been keeping up over time. We are pretty stable around 22-23%. In the past, but over time, because of lack of introduction of products, we slipped down to the levels that you actually saw. But things are coming back, on the back of, in fact, introduction of products. In this particular quarter, we actually saw, the reduction of the freight, as compared to the previous quarter. There's, of course, this continuous improvement program on the gross margins front itself. There has been tremendous work done when it comes to manpower, manpower cost. It reached a new high in Q1, but as you can see, it has come down significantly. There are a host of...
Okay, what is the expectation of India's growth coming in the coming year, Nilesh? If you could give us some guidance.
So like I said, I think we've seen a very healthy bounce back in India. We see, so as you know, in anticipation of some of the constraints which would happen with COVID, we saw that the Q4 quarter was significantly up for the industry and for Lupin. Q1 was significantly down, and we saw the recovery starting in Q2, right? So we saw July.
All right. Thank you so much, Nilesh and Ramesh, for joining in and talking about Lupin's Q2 performance and the way forward. The stock continues to trade a bit weak, though, in trade. Moving on, if the yellow metal is something that you want to add to your financial portfolio, but you don't want to go through the hassle of buying physical jewelry,